Today was day 4 of options trading, 1st of June. Thursday today, so Bank Nifty expiry was today, due today. So the market closed yesterday at around 44,164 for Bank Nifty, and today we had a plan of selling for next expiry, buying for today expiry. The hedges were to be placed around somewhere between 1200 to 1500 points away with the gap, and the target was to stay between like 700 points in the spot to build up the range for the call and put sells or buy whatever trades are to be taken. So now we also had a strategy for like buy at the money, put at the money for this expiry, to in case we see some sudden shifts in the market. Okay, so if the plan was like if the market trades around at 44,300 and to 44,400, the first 15-minute candle closes around at this range, then we go for a call buy option for 44,400 or 44,500, which was the at the money buy strategy. Okay, so with this we started the day, and market opened around at 44,064 to 44,098, which is way below the expected range. Okay, so we took the following positions. I'll zoom in for better clarity. Yeah, that's pretty much it. Yeah, these are the positions that we took. Okay, so now the next strategy was if this sustains at if the 5-minute candle sustains at 44,200, like if it goes up and sustains settles at 44,200, makes it a spot. So we sell put of we then sell the put up to put we sell put option of around 44,800 and put the hedge accordingly. Okay, so at 9:31 we bought a put option at 44,000, which was the at the money put buy, since the market was going down, and so we shifted from the call to put at the money. And then again at 9:43 we took this particular trade, 39,500 we put and the hedge. But the thing is, this was taken by mistakes. I kept it in the log as a learning that if you hurry or rush, you might miss up a 2-digit. Okay, so this was supposed to be at 49,500, but I took the trade anyways, and then I got out of it immediately, realizing my mistake. Okay, it's just my fault there. So yeah, and overall there was no movement as such in the market. There was no movement. The chart was going sideways. The OI charts, the market isn't, but the thing was the market wasn't showing any sign of weakness as well. So the OI charts showed around 44,000 next month writing happening, which also there were other parameters like yesterday there was FTI rebalancing, so there were we saw a movement of over 500 points, and then today the US debt settling meeting is also there, for which all these factors have contributed to the sideways trajectory of the Bank Nifty chart. Okay, so around this was at 9:45-10, around that time. So at 11:24 also market stayed put. 44, it fluctuated between 44,036 to 44,126 from 10 am. VIX was also low. India VIX was at 11.47. Okay, so the indicators were positive, yet there was no liquidity or movement upwards or downwards. As you can see, the advanced decline action was like a pair of parallel lines. Okay, so at 12:30 usually the European markets kick in, but we see somehow a upward shift in the market where it crossed some high. Then at 1:30 this upward motion was stabilizing. Trades we took at 43,700 put, we sold 2 lot and hedged accordingly. So these were the current positions around at 1:30 like that. Okay, so next, yeah, this was the upward motion. Then the day high broke. This was the time. Yeah, this is the marker for when the day high broke, and we shifted the bias to a bit bullish. Okay, so now at Broke at 153. Important lesson learned. Yeah, the thing was, actually this is very important for me, as since I'm learning. So I had a discussion with the expert. I had all the positions placed in a bearish bias. Okay, it was not balanced, so I got the idea of balanced trading and what it is. And this is a new concept to me, so it will take some time. So yeah, balance is very important, because there was a sudden upshift. As you can see, it was going down and then it suddenly shifted up, so I had no ways to protect that, so I balanced it. There was a wick spike. The reason, yeah, I went into the cause of this. There was a wick spike, which probably in that region it showed this upward break. Okay, so yeah, we are holding all the positions as of now. The market was sideways, there was no activity. Suddenly after 2, the market started going down and it broke all the lows, and then we realized to get out of the PSL, because we were taking some losses there. Okay, and instead we shifted the bias completely bearish, so we sold 44,900 3 lot call options and 44,700 call options, to take our upper limit down a notch. Okay, so that was it. But we had to, as I said, balance trading is important. So I had a discussion again with my expert, and then we got to the point that if the spot stays put around 43,900 to 44,000, then we were supposed to sell put options at 43,900, because then it might have gone up. Okay, so keep that balance down. But the last 30 minutes were full of action in the market today. Like, there were a lot of downsides for which I didn't take the trade, because this would have led to all kinds of fuck ups. Okay, so this is 43,900 limit broke. Even that, as you can see here, it went till 43,700, which set the new mark at 43,700. So we shifted the call all limits from 44,900 and 700 to 44,400 and 500, and we got some at the money put 44,000. We bought it. Yeah, and last 2 5-minute candles showed some positive moves. So again, going back to our balanced trading concept, which we learned today, 42,900 is 3 lot we sold. Although the bias, like as per these positions, the bias is a bit on the bearish side more. Let's see what happens. Okay, that is the thing. Yeah, learning is that out of all this entire fiasco, I had a call option bought, at the money call option at 44,100, which I missed somehow and sustained a loss of 6,000, nearly 6k. But no worries, at the end this bearish bias of mine gave of ours, and gave some good ideas, good profit. So we balanced it off. Let's see, I have these positions for tomorrow. Please, let's see, stay positive. What happens, we'll report in the next vlog. Okay.